So look, every single day, guys, I get a message from people asking me what the best trading strategy is. I also see this topic discussed online multiple times. What is the best trading strategy? Is it ICT? Is it momentum trading? Is it orb trading? Is it news trading? What actually generates the most alpha in the markets? And honestly, there's so much noise out there. There's so many different gurus pushing out that one golden strategy that's going to make you rich. Now, I'm personally a swing trader. I've been trading for 7 years and I've tested almost every strategy under the sun. I've day traded, I've used orbs, I've used Elliott waves, I've used literally anything that you can think of to try to get an edge in the market. But honestly, for me, it's not until I simplified my trading when everything became just absolutely, astronomically better for me. And through all those pains and losses, I've figured out what actually works in the market. Now, today we're ranking all these trading strategies from S tier to D tier and seeing which one actually makes sense, which one you should pursue to actually learn to potentially trade, and how you can take advantage of these strategies to become profitable. Whether you're looking to quit your 9 to 5 and make trading a full-time thing, or if you want to just stop losing in trading, this video is going to save you years of trial and error. Today, I'm going to go through some of the most popular trading strategies. I've actually asked ChatGPT to tell me which are the top 8 most popular strategies and seeing which one actually is profitable and which one is just complete BS. Now, before I get into the video, I just want to let you guys know, like I said, trading strategies can work depending on the person. A lot of it comes down to your execution, your discipline, your system, and a lot of these things might work for someone else and might not work for somebody. So the most important thing is finding out what works for you as a trader. All right, guys, so here's our tier list, and the first one looks to be ICT trading. Now, if you're not familiar with ICT, this is something that's been kind of taking over, I'd say, the internet over the last 4 to 5 years. Since 2020, 2021, I think it even became more popular in the last few years. ICT trading is inner circle trader, and he basically kind of comprised these systems that you could use on futures. I'm not sure exactly if this works on stocks. I just know it's super popular on trading futures. I've tried this out personally a few times, and I know for a fact that ICT trading does work to a certain extent, but it's just a coined way to look at specific things that happen in the market. This isn't like a kind of end all be all strategy. It's actually something that derives from strategies that have worked in the past. Strategies like liquidity sweeps. These have been around for hundreds of years, and what ends up happening is a lot of these traders or a lot of these gurus try to come on these platforms and try to pretend like they created they reinvented the wheel and created the strategies that absolutely work. Now, a lot of these are literally simple concepts that have worked and a lot of traders have been using for the past few years. Now, in terms of the root of ICT when it comes to liquidity sweeps, looking for divergences in the market, I personally think that actually works. I've used liquidity sweeps before within my own trading when I look at undercut and rallies, red dog reversals, and these kind of oversold extension moves and failed breakouts, failed breakdowns, and these do work. So just from these concepts, I would say this is probably an A strategy. I wouldn't say it's an S tier strategy because an S tier strategy needs to have the higher time frame alignment, and you need to be able to use this on any single stock in the market to create and generate insane risk to reward. And I just don't think ICT does that, but it's definitely a strategy that can work. I've seen it work for specific people as well. And from everything that I've learned and studied about this, it does seem like a strategy that with the right system can work very well. All right, so the next strategy is going to be mean reversion. So mean reversions basically mean when a stock is overextended to a specific direction, could be to the upside or the downside, and then price must return to the mean. Now, personally, I've used this strategy a lot when it comes to parabolic shorts and overextension reversals. This is probably a strategy that works, I'd say 70 to 80% of the time. Super high win rate, and it can generate a ton of alpha. Now, there are some downsides to this, and it's again why I think this one goes into the A category. It's very, very hard to find these setups on a consistent basis. These are actually setups that kind of happen, when the market is very extended to one direction. And it needs like all the stars to align. You need to have a lot of different things happening. The stock needs to be super extended, needs to be above the Bollinger Bands or below the Bollinger Bands, and then you need to have certain things align. Now, I personally like to have this strategy as a like potential kind of tool under my belt whenever the market does get extended to either direction and my strategy doesn't really make sense during those times. I actually use this as a way to catch like parabolic shorts or a parabolic bottom, so overextension reversal to the upside from a down move. And I'll show you guys examples of how I've been able to do this. All right, so this is the NASDAQ from April of 2025, and we were actually making a pretty big correction in the market, like a 24% move to the downside. Now, on this last leg of the move down, you can actually see what ends up happening in the market. It starts to become way overextended from the moving averages. So right here, we're breaking down, we're making a nice move lower, but look at how the 8 EMA is kind of like, guiding price lower. The 21 EMA is kind of guiding price lower. But once we got down all the way to these lows, look at how extended we were from the 50 EMA, about 18%. This is where you're looking for that mean reversion to happen. And a mean reversion basically means a stock made a massive move and it's gone way too extended to the point that it's ready to snap back up and get back to the mean, right? Always think about the mean as like the middle line. So if we made a big move down, let's say from here to here, if you can kind of measure where the 50% retracement would be, that could actually be a great spot to look for the mean reversion, to target that mean reversion. So that's what I was looking at on the NASDAQ. And I was actually able to catch this using that mean reversion strategy right here in the April low. But I used a few different ways and kind of methods to make sure that I was catching the bottom. So I made sure I added up the confluences, right? You're never just guessing. So first of all, we had a retest of the previous all-time high break. So on the weekly, you could see we retested the previous all-time high break to the T. And we also had an RDR tactic, which means the stock was down a few days in a row. So right here we had 1, 2, 3 down days in a row. It broke the previous day's low and then it ended up reclaiming. You put your stop loss at the low of day and then you catch a nice reversal. Now, the pros of this is sometimes you'll catch absolutely insane moves like this and you'll literally catch the bottom. The minuses is most of the time on these reversals, you barely get any, move with follow through. So even right here, this slightly extended to the downside. If you would have taken a mean reversion, you barely get anything, right? You catch like a 4% move, which is not a great risk to reward to the upside, especially using, like low of day stop, which is probably something you'd be doing. So the moves don't really happen much, but like 1, 2, 3, 4 times a year, you can catch some pretty nice overextension reversals to both sides. Right here, for example, is a pretty nice extension reversal to the upside. And I'll show you guys another trade that I took on a parabolic short. So this is another great example, right? This stock gets super extended from the moving averages. It's almost parabolic, meaning like the equity curve is literally almost going the wrong way. Like it's like almost going backwards. And this had a nice kind of break of the previous day's high, ended up not being able to hold above. That's going to be your RDR short. And then this plays a nice move to the downside. So personally, I would have mean reversions as an A rating. Reason why is because they take so long to set up. You have to have so much patience. You could probably only take about 4 to 5 really good A plus, trades a year from using this strategy, but it does work. And when it works, sometimes it could work absolutely insane. All right, now the next strategy that we have is going to be trendline trading. So trendline trading is basically looking at specific trends and being able to use the trend lines to add on to positions or, take positions the other way, depending on if the trend line breaks. Now, this is a strategy that to me is very similar to breakout and momentum trading, but it adds way too much, things to do rather than making it very simplistic like momentum and breakout trading, which is why I personally would have this as a B. It can work. The probability isn't amazing because you're not getting great continuation on a lot of the moves, but you have a good solid spot where you can look for a nice level of support to, take trades off of. But in my opinion, this isn't a strategy that really gives you too much alpha. A lot of times the trend lines will break. You won't have a high probability of them moving higher. And then also, you don't know if the stock is going to get momentum when it makes the next leg up, right? Which is very important because that's going to tell us, is there going to be a very big move in that stock after it touches the trend line, right? Sometimes the stock can touch the trend line, it can bounce, but it barely moves higher. And if it barely moves higher, risk to reward just does not make sense. So this one I would have in the B tier. Now, the next one is going to be long-term investing. And long-term investing is not necessarily like a trading strategy, but I guess it could kind of be one. But it's something that I always get asked, like, Sean, why don't you just long-term invest? Like you have to do way less work work and you can make, an absolute killing, right? Now, what I would say for a lot of people, long-term investing probably works for 95% of population. And just because of that, I'd have it as an A. And honestly, potentially if there was like a higher tier, I'd have it between an A and S. So it's like the highest A tier between these two. And the reason why is because, like I said, it works for 95% of people. And just off the fact that it does work for most people, it's got to be an A. And I've personally done very well with long-term investments. I've been able to make, generate a lot of alpha with those. Now, the thing where it kind of gets, a little bit tough is there is an edge when it comes to long-term investments, and a lot of people don't understand how to find that. You have to dive deep into the company's balance sheets. You have to look at if they're growing quarter over quarter. You have to pick the right companies. A lot of these stocks and companies go to zero. If you're just buying an index fund like the VOO, then sure, you're going to get, 8 to 10% a year, and you'll be able to compound, which is great, but you won't be generating 100%, 200%, 300% returns a year, which is very possible with some of these other strategies. And just based off the fact that, you're not able to generate that much alpha with long-term investments, I would say that it's an A, very close to an S. It could be an S depending on who the trader is and if they who the investor is. If it's like obviously a Warren Buffett, he's doing his research, he knows exactly which companies to invest in, and that could be an S strategy. And I would honestly again have it like one of the high strategies, but it takes a lot of time to kind of master which companies to buy and things like that. And also, you're not going to be usually generating super high returns, like outrageous returns, like 3-digit returns. Now, going into our next strategy, this is where you can have 3-digit returns probably every single year. Of course, it depends on the market and the conditions, but this is the first official S plus trading strategy. And I'm not only saying this because I'm biased. Obviously, I'm a momentum trader and I swing trade breakouts. But in my opinion, this is where you generate the most alpha in the market. The reason why is because if you can catch a big momentum move in the markets on a stock that's breaking out through a key level, has no resistance going into the all-time highs, these are stocks that can triple, quadruple, 5x, 10x, 10 baggers, right? 100 baggers. I've had 100 baggers before just trading this strategy, and you can have triple-digit returns basically every single year. I've had 4-digit returns twice in my trading career in years due to this strategy. And there's a reason why the best traders in the world swing trade momentum. If you go and look at any of the best traders in the world, you type in online, you go to US Investing Championships, you'll see that the best traders in the world, they are swing traders, and every single trader that's in the US Investing Championship is a swing trader that trades momentum. And the reason why is because, like I said, it generates some of the most alpha and you can create some incredible returns for yourself with swing trading. Now, there are a few cons. The first con is that the market conditions have to be strong. If the market starts to chop, you're not going to be making money. And actually, this could be a very bad negative because a lot of people don't have self-control. And when the market starts to chop, they'll either go, switch strategies, they'll hop around, they say that the strategy doesn't work. And the type of environment, you have to know which environment your strategy works the best in. For example, when the markets gets extended to both directions, use mean reversions. When the markets are trending, use momentum trading, right? These are things you can start to kind of apply and actually kind of combine these strategies together in your toolbox. But first, master one and figure out which one works the best for you as a trader. So momentum trading would be, in my opinion, the best strategy. You can generate the most alpha. If you catch a good breakout with a ton of momentum, your risk reward is just absolutely insane. The cons would be the choppy environments, failed breakouts. A lot of people aren't really comfortable with having a low win rate. With momentum trading, you are going to have a low win rate. You're probably going to have less than a 50% win rate. Sometimes I've seen some of the best traders that I've personally seen and studied have had like a 30% win rate, but have still made millions and millions of dollars because of how good the risk to reward is in momentum trading. But that's a con, right? A lot of people are not very comfortable with losing money and losing trades and being in drawdown, which is something you'll be in when you are momentum trading. So just keep that in mind. When it comes to momentum trading, there are cons as well, just like any other strategy. All right, now the next strategy is going to be an orb strategy. So this is going to be an opening range break. So I actually like this strategy a lot, especially as a day trader, but there are some cons to this as well. First of all, you're not going to be looking at the daily magnitude. And for getting the best trades in the market, you need to be using the bigger time frames because bigger time frames give you the best moves. If you're looking at the 5-minute time frame, the 15-minute time frame, there could be a setup on literally any 5-minute time frame on any stock at any given time. But how many stocks have a daily setup, a weekly setup, a monthly setup? There's not a lot of stocks that do, and this is why making sure that you're trading bigger time frames is super important. So the fact that opening range breakouts really only work on the lower time frames already gives it a, a level down, which is why I would personally have opening range breakouts as an A. I would have this below momentum trading, but I would have this a little bit above mean reversions because it does play out more often than mean reversions, but it might play out too much to the point where you have too many setups to look at. Now, there's obviously some criteria you could use when it comes to orbs, but the most important thing is that you want to combine the daily time frame with opening range breakouts. So you want the setup to be on the bigger time frame and then using orbs on the lower time frames. This is what I personally do with my trading. I use orbs as a great way to get good entries on the lower time frames by combining it with a good daily setup. Don't be that person that just trades an orb every single day on like the S&P, because to be honest with you guys, that's not going to be a strategy that has long-term longevity. All right, so our next strategy is going to be a scalping strategy, and this one really refers to buying like the VWAP, for example, and using the VWAP to, buy pullbacks into or sell when the, stock goes below the VWAP. Now, very similar to the opening range breakout, scalping day trading doesn't really work great because of the fact that you're using the lower time frames and your magnitude is not very big. The risk to reward is absolutely terrible most of the times. And, you have to really focus on having a high win rate. Now, that could be good for some people. If you really like having a high win rate, then scalping and day trading work the best because you can have a really good win rate, but your risk to reward is going to suck. So do you like having really big winners and small losers, or do you like having about the same winners and losers, but having a higher win rate? In my opinion, you're doing way more work with scalping, with day trading, and, doing way too much for little results. Whereas with swing trading, you have very, very little input, but massive results if you do it the right way. And just for that, I'm going to have scalping at a B. I think the opening range breakout works better than taking small scalps. I just don't like the risk to reward at all. And for me personally, using this and using the VWAP, it works well sometimes, and sometimes it doesn't work well, just like any indicator out there, which is why I'm not big on indicator trading. I think indicators are always lagging. I'm always looking at price and volume. That is going to be something that happens in real time. And you can't really, fake price and volume. It's going to be right in front of you, and you're going to be able to, trade what's in front of you. And in my opinion, that works the best. All right, now last but not least is going to be news trading, and I might be missing a few strategies, so let me know if there's anything else you guys want me to rate. But news trading, in my opinion, is probably going to be a C. The reason why is because sometimes, yes, you will hit absolutely massive trades, but what happens a lot of times is sell the news, right? A lot of the news is already priced in on a lot of companies, and the news might get, completely sold off if you buy before anticipating a news event. If you buy after the news drops and it's a big move that happens, I've seen that work well sometimes, but a lot of other times the move fades out before, it really gets any traction, volume reduces, and the trade fails. Now, this would be something that if you use on its own, I would have it as a C, but if you use technical analysis and you combine this together with price action and maybe use, news trading with scalping or news trading with orb trading, you might get this up to like a B. I wouldn't have this as an A, but just as its own trading strategy, just using news, no technical analysis, no risk management, I would have this as a C because you don't have good risk management. And if you don't have good risk management, your strategy completely falls apart. All right, guys, there you have it. Every single trading strategy rated by someone who's used all these strategies and lived the tell to actually be able to rate them. But here's the reality check. Every single strategy can work, and the best trading strategy is the one that actually works best for you, the one that fits your lifestyle, the one that makes sure that no matter what, it fits your personality. If you like winning more, then you have to trade a strategy where the win rate is higher. If you have good patience and risk management, then you could trade a strategy where your win rate is a little bit lower, but the risk reward is much higher. Now look, I can give you all the ratings and trading strategies in the world, but here's what nobody really talks about. The hardest part about trading isn't really the strategy itself and learning that. It's about executing the strategy every single day and having the discipline and confidence to stick to one single strategy. It's about staying disciplined when you're down 5 or 10% for the week and every single bone in your body wants to revenge trade to get back to green. It's about having the confidence to take the next trade even when you've lost 5 trades in a row. And you know what changed for me? Having a systematic approach. I use a checklist that makes sure that no matter what, I don't have FOMO. I make sure that the trade that I'm taking actually makes sense and it's not a gamble or it's not like a revenge trade. And this sets me up to have a systematic approach that is repeatable, scalable, and I'm able to do this for the rest of my life. This checklist will tell you in literally 60 seconds if you have an actual setup that works or if you're about to just donate money to the markets. It covers literally everything: your volume confirmation, your sizing, the setup quality, the price action quality, even the market conditions. And this is what sets aside most traders that, gamble and the ones that are actually professional traders. It's completely free to use. Link is in the description. Make sure to download it, print it out, and use it for every single trade that you're going to take for the next, let's say, 10 trades in a row, and see how much that's going to change your trading. Drop a comment below with which strategy you think works the best for you, and let me know if I missed out on any strategies that work as well. And if this video saved you from months of trial and error, please hit that subscribe button down below. And I'll see you guys again soon. Peace.